Good afternoon, everyone. How are you today? I hope that you are doing well and keeping safe in the second week of our
There is something with the volume, doctor.
Volume. Okay.
No, we can hear you clearly. He has a problem with his PC, I think.
Faizan?
Mm-hmm. You can hear me now? Hello?
We can hear you now. Yes, doctor.
Okay. Thank you. Okay, so I hope that you are doing well and keeping safe in this part of the year. I know that there is a lots of changes have been made recently regarding to the new economy in Dubai called contactless economy. This contactless economy, where we can use the paperless work in different part of Emirates, there is a lots of using touchable payment and touchable communication, which is a near communication instead of face-to-face communication. So in the university, there is a lots of contactless technology has been raised recently called a digital contactless technology, where you can buy your enrollment fees by using the mobile phone and sharing your code, and this is your receipt. So based on that, what the main reflection on the value added tax and your role as an auditor, what are the guidance, what are the advice that you need to take into consideration and give it to your client based on the value added tax contactless economy and value added tax invoice and receipts, where there is no hard copies or PDF files except your code or a barcode, and we will talking about the value added tax and the fraud for value added tax, which is a cultural fraud. There's a new fraud, and how can we use the value added tax laundry to create a money laundry by using the tax evasion money, where we did not pay for the tax authority, and we use it as an internal or existed or available money to create another anti-money laundering scenarios by escaping from paying all of those value-added tax fees to or outcomes to the authority or federal tax authority. So we'll talk about this issue, this little bit communicated scenario for value-added tax, using a value-added tax as a source of replacing money. The money is available, but we did not pay for the value-added tax, and there is a lot of or millions or billions of money has been skipped or has been evaded or make a tax evasion in Europe recently in the last 5 years, and actually this money has been used to create anti-money or money laundering scenario or another type of fraud. We will talk about this type of fraud and what's your own issue and what's your own advice you have to give it to your client regarding to this issue, and how can you avoid for being one of those people who create this type of tax evasion. I know that you have a great background about the value-added tax framework in the UAE, but just a reminder, the value-added tax is intangible, or sorry, indirect group of a piece of value-added tax as a group of the indirect value-added tax. The tax, as we know that it's something regarding to the direct tax, which is the income tax, profitable capital profit tax, and all type of income tax, which is the direct tax. For direct tax, before you take your money, you pay. You will find that your amount of money have been received is discounted or has been reduced by the outcomes. So the government take the tax from the source of your income before you take your money. So this is called indirect tax. Luckily, it's not available in the GCC countries because it's ranged between 38% up to 50%. In England, it's this part of tax has been exceeded more than 48% or maybe 45% of your income. So maybe or nearly 50% of your income paid for the tax and council tax and housing tax. There are lots of tax in the European Union, especially in Germany and UK. That's because of the 21% or 22% of the UK, United Kingdom incomes coming from this part of tax, and the governmental expenditure paid around 22% of their income for public services. So if you are, make sure that if you are a tourist in UK less than 90 days, you ask for a value-added tax return in a value-added tax fund or return gate in Heathrow Airport. So it's very important to take this tax. If you take, for example, Apple MacBook Pro laptop, and you paid 1,200 sterling pound, you have to receive more than 200 or 300 value-added tax return. So it's a valuable amount of money. Comparing with 5% of GCC and Canada is 5%. It's valuable to take those money back again to your pocket because it's a little bit worthy. So the value-added tax is charged at each stage in the supplier of goods and services. Any value-added operating procedures and process will add value to the final product you will consume should take this value-added tax and make sure this added value operating to the final product. So the final user will pay for all of those value-added tax. This is a kind of indirect tax. Once you receive money as an income, you pay for this type of value-added tax as an indirect tax, and this is more sociable and less harmful for the majority of people, because only 5% of the majority of people who pay for the extra luxurious and external payment and external goods and services. 0% for the financial services, healthcare services, and housing issues, which is not the majority of the people could consume it. But the majority of people are exempted from this issue. So it's like a hierarchy of issues. The majority of people will exempted from paying all of those tax. It's more sociable. Those people who are involved in particular service, they will pay 0%, and the money will be refunded back again at the end of this value added tax period of time. And only 5% who consume luxurious goods or particular goods, and they will charge around 5%. It's actually ranged from 5 to 25%, in Saudi Arabia 15%, and the majority of GCC 6 states has a different issues. Luckily, so far in the UAE is 5%. The value-added tax is not the only type of tax that we have over here. Otherwise, we will name the Federal Tax Authority as a Federal Value-Added Tax Authority. It's not a Value-Added Tax Authority. It's a tax authority, though. So there is another type of tax has been carried out in the UAE, especially for special goods and luxurious goods. So they pay more than 200 or 300% of this value-added tax, like the goods and services regarding to the special and unique goods and communities tax. So it's a part of indirect tax, which has been discovered and has been established. This type of value-added tax in France since has been established around 1956. Year 1956, and they start to upload or use all of those value-added tax type of taxation, especially here in GCC. Once we start applying the value-added tax in 2018, we start converting from the cash pays to accurate pays for all of those countries who apply the value-added tax and create the value-added tax authority in their own Ministry of Finance or Economy. So the registration based on that will take levels of layering the amount of 375,000, which is could be measured as $100,000 must register in this value-added tax authority. Less than that to be optional, collected by the registration person or on behalf of the government federal taxation authority. The basic process: we have two types of tax: output tax, which the customer or the final user of this type of commodities will pay for all of those people who are retailer, wholesaler, and importer who make a value-added operation for this value-added tax, less the input tax, which is the value-added tax based on the business purchase. And the difference is the net value-added tax will go to the payable government and refundable from the government in case we refund the money in zero value-added tax, or we have a case of that. There's a lot of cases that have been made to adjust or to establish this new era of tax economic era. So we have to make sure that the payment for the government tax will be the net tax, the difference between output tax and input tax. The treatment for the value-added tax and the output tax, the person shall be able to charge 5% up to 25% in case of this change, but no less than the 5%, and it's a tax invoice from the customer. The taxable supply with the standard output value-added tax rate apply the value-added tax input tax in recoverable, and non-value-added tax supplier, exempted supplier, the VAT input tax is not recoverable. So supply of goods and services or any type of commodities free of course are also taxable unless such supply is conducted within the context of business or group of economy, such as a sample of gift within the value described. The input tax, concept of it, the facilitating or facilitates value additional to avoid cascading effort and credit for tax paid on purchase for taxable supplier, including zero rated suppliers. Exempted, which is the exempted categories, non-taxable supplier, the people who will not pay this type of tax, which is related to governmental goods and services, which is negative list, private purposes, so entertainment, and personal use. The specific concept regarding to the UAE culture receipts taxable person and registered correctly charged the claimable and evidenced as per documents. So you have to make sure that you keep all those documents up to 5 years regarding to the every single part of taxation, including the taxation invoice, number of contracts and labor contracts. That has been paid in intended to be paid within maximum 6 months and entitled for the input tax credited or refunded. Not claimable on banded goods. Recoverable input tax, which is the input value added adjustment. Deduction can only be for supplier by taxable person or the company, which are used to intended to be used for making any of the following suppliers or taxable suppliers that are made outside the state, and suppliers specified in the executed regulation of the degree law that made outside of the state. Supplier definition and place and the date of supplying issues. The supplier goods and services, make sure that we have a concept of this supplier tax goods and services. The supplier goods mean the transfer of goods ownership and the right to dispose them as an owner. Transfer of ownership of goods and services under the written verbal agreement. A transfer of owners for consideration. Example for that: water, real estate, financial services, tenancy, and supply for all forms of water, gas, and energy suppliers. Suppliers of services means any kind of supply transaction that does not include the tangible product, which is the goods, granting assignment, cassation, and sender of the right. Make available facilities or advantages, not particulate or participate in any kind of activities, or not to allow all occurrence or agree to perform any type of activities. So the transfer of licensing or of intangible rights and intangible services. For the example, the rights of authors, investment, artists, and the right for trademark. All of those kind could be considered as a supply of intangible product or service. Place of suppliers, when we could pay for it. In terms of goods and services, the goods, the place of suppliers or the supplying and the location of goods. Number one, the locality. Here we can say that the localization is the place we can pay for this supplying or domestic supplies or supplies. No movement of goods outside the UAE subject to application or applicable value-added tax rate in the UAE and consider or of zero rate. Dubai, Al Fujairah, Dubai, Abu Dhabi. Export to outside UK, for example, UAE to UK, for example, or any GCC countries will be zero rate. Third, port shipments, which is goods delivered directly from place of suppliers outside the UAE. In terms of the services, the place of supplier is where the supplier has the place of residence, so it's domestic suppliers supplied by the registered person to another person within UAE to subject to applicable VAT rate in the UAE. Export outside the UAE will be zero rate. Places of supplier services supplied by the person not resident in the UAE to a VAT registered business in the UAE. So we have to make sure that we, in the import and export, we have the possibility to have all of those people in the group of tax in order to avoid any kind of paying a double tax or increasing the amount of tax. Place of supplies of goods, so domestic suppliers, export, third, port shipping, and this is zero rate in the outside or export, and goods delivered directly from China to UK and outside scope of UAE VAT. So the placement and localization or location is very important to adjust what type of applicable value-added tax and collected all those value-added tax. And this is a link to our topic for type of fraud and what we have already named as a value-added tax laundering issues. Place of value-added tax of supplier in goods. In the place of goods which is not transported or sent outside recipient in the place of its existence at the date when they have become available. The place of supplier goods which are transported by the supplier to the recipient in the place of its existence at the date of which transportation has been or has started. The place of import of goods is the country or the first point of entry. So the country of origin is the first point of coming to the first point of entry in Dubai and Abu Dhabi. How do, because we said that the value-added tax, one of the indirect tax, and there is a lot of indirect tax, like for example, the sales and value-added tax. There are different calculation and different type, and in terms of concept, it's totally different. The sales tax will be paid only one time. However, the value-added tax will be paid, as we said, for each process or value-added operation has been made or added to the final product. So each supplier who add value to this type of product will pay for value-added tax as a net tax to the government or the value-added authority or the value-added tax authority. However, the sales tax will pay just only one time for the sales. However, both of them are similar as an indirect tax. In the sales tax collected only one time, this is the concept, but the value-added tax, we will pay for the value-added operation to the final commodity or services. And this is one of the huge tree of taxes, which is the value-added tax. As we said, that the value-added tax has been established in 1960 or 56. Along with the sales tax, turnover, and other general tax on goods and services. So the indirect tax is the tax for purchased goods and services containing all type of tangible and intangible services that create value to the final product. Important definition for that: the zero suppliers. Output tax is zero supplier or rate. Input tax credit is allowed, no restriction. The zero supplier in line with the GCC framework. So we have export of goods and services, medicine, which has been recently increased between different GCC and out of the GCC region, in MENA region and European region, the global region. Supply of sea and land, air means of transportation, gold, silver, and all the precious metal. 90% of more than purity, crude oil and natural gas, also, or any energy product and services has been created as a zero-rated suppliers. The zero-rated UAE specific, the healthcare and residential, not commercial real estate, residential real estate, healthcare, transportation, education, and all of those public services delivered to the citizen and all of those people who are resident and expatriate here in the UAE. The exempted, as we can see here, there is a supplier are exempted from the tax, restricted to the local jurisdiction only, and define the sector only. Input tax credit not available for exempted supplier. For those people who are supplier, like the army and policemen, they will not pay for all of those issues. So the government will pay on behalf of them all type of tax. Should be paid by the government, and this is a majority of people who consume all of those goods and services, which is considered as a public services. The tax is the only source, a diverse source recently of the income, and one of the national security returns for the state, and we actually use the concept of value-added tax recognition returns or return recognition as one of the most important returns. However, there is a lot of problems related to the value-added tax collection. Recently, especially in Europe, there's a lot of problem has been made and lots of losses for not collecting the majority of this type of tax. And recently, in 2019, 2020, we found that we could expect more than we have already done in the return of value-added tax. But because of this is the new concept has been made, so there's a lots of telephone calls, around 333,000 telephone calls has been made during 2018, and this is the type of cost which reduce the expected returns of this type of diverse income of the government. In the international world, we found that there is a lots of fraud has been made in order to use the concept of value-added tax regime in order to achieve personal and opportunities to achieve abnormal personal benefits and returns from this concept. So the number of fraud costs and fraud settle cost exceeded more than 3 billion in European countries. So now the auditors' responsibility come into the play, the customer due diligence, as a tool to understand how can we wash our hand, value-added tax hand, from any kind of value-added tax fraud. So as we explained before in the last 5 workshops, that knowing the customer is very important, especially in the value-added tax and all value-added tax evasion, which could create another fraud related to the value-added tax money laundering, using the tax evasion to create a money laundering, terrorist finance, and make a credit default, and all type of financial criminals, because they passed the first stage of anti-money laundering, which is the placement. So we have the money inside the country, and we did not pay it for the tax authority, so we can use it in creating another fraudulent scenario to create another benefit for that. What is the important role for the auditor to conduct the client due diligence in the value-added tax scenario? So there is another concept for any international tax regime, which is not really clear in the countries who did not have a history of taxation, like in the Gulf area. This is the first time they apply the value-added tax all over the world, but in this type of region, they didn't have any experience. Even they didn't have the scenarios to create the defense or countermeasures for all of those value-added tax fraud. So in the international tax regime, there is a concept called missing trader fraud. Missing trader fraud. So they try to open the loop, not closing the loop, they open the loop, because the International Tax Authority and the international tax regime is such a circularized system. We paid for the output and then paid for the input, and then the government will achieve, or the government will direct receive the net income from the tax. But once we apply it in terms of international tax in the different countries outside the region, with MENA countries, with European countries, there is a lot of fraud could be made through the missing trader fraud. The fraud is committed when goods are sold at a price that include the value-added tax, but the seller never pay the value-added tax he or she received from the sales to the government. And in this point, the fraud scenario or the fraud setter scenario will start to play and create a huge amount of money, which is passing the first stage of anti-money laundering, for example, go to the placement, and then try to put this money not in the value-added tax authority, but in other investment in order to change the issue. That's why in Dubai they create the contactless economy, or contactless or cashless touchable money, by using all of those contactless economy and technology in order to track down the fraud setter from not paying the value-added tax to the government. And then once they have witnessed that another activity or economic or commercial activity has been opened or startup in another industry or another area, they will prevent them from carrying out all of those business inside and during the region where the value-added tax authority agreement has been made, to prevent this type of investor or supplier from starting a new system or a new business unless they pay for the last month or the last tax period of time before they start another thing, unless they have a recorded tracking sort of information with this type of supplier as a fraud setter. So the missing trading fraud start from not paying the value-added tax internationally, where there is another international transaction. Complex corporate structure, which is available recently in the business model, networks of companies are often used to repeatedly sell the same goods and discuss the fraud. So they try to manipulate the value-added tax authority by not paying for the selling tax, which is the input tax to the government. Try to manipulate the documentation and try to sell the same goods the same goods again by making any additional value-added expenses and try to change the shape of the product to resell it again. This is another name. There is another name of the tax fraud, value-added tax fraud and tax family fraud family, like money laundering, terrorist finance, and credit default, which is called missing trader intra-community fraud, which is will not able to happen inside one community. It does need more than one community in order to manipulate the selling tax should be paid to the governmental value-added tax authority. The value-added tax fraud has an extensive impact on European Union budget. A missing trader intra community, MTIC fraud is the biggest kind of value-added tax fraud. It would be beneficial for or to fight this kind of fraud to a large extent. The MTIC and carousel fraud both used to zero-rate value-added tax supplier. So in financial services and any type of product and non-product services, I mean, with a zero-rate value-added tax system, they start to do that in the middle of this rate of value-added tax system. On the external or extra section of worldwide community trade, the missing trading disappear with the value-added tax that has been charged in the country of destination of the commodity sold. In case of carousel fraud, the goods or services are being redirected back again to the initial seller without paying the sales tax or value-added tax to the authority. Around 60 billion on annual base. The exact amount of is difficult to calculate as sufficient data is very is not available. It's very hard to obtain all of those type of complexity of calculation of this data. So 60 billion euro amount of fraud tax authority or MTICF fraud all over the world. So what we should do as auditors, and how can we know the customer or the supplier now? It's not a customer, it's a supplier for the government. So we are now dealing with the client as one of the most important dealer in the engagement contract, but now we are dealing with the taxpayer. So this is we have to be more compliant regarding to the client behavior in terms of value-added tax fraud or tax evasion in general. So the customer due diligence on parties and products and the transaction makes perfect sense. It will help. It will detect all of those responsibility and all of those problems may happen in the future time. Validation of available documentation due diligence on companies and retention of documents used for assessment this type of risk and fraud. Organization individuals need to review the tax procedure to validate if they are fit or capable to identify value-added tax fraud. Where required, it does need to enlist expert help to ensure the challenge is met properly. Effective training and awareness should be delivered for the staff of the organization. How can we be more compliant regarding to paying all of those value-added tax, and be sure that they are aware of all of those issues. So they will not consider it as a unknown or not in purpose. So we will consider it as a crime. So everyone who are involved in this crime will be on purpose make all of those type of fraud. So we have to be aware of all of those scenarios, and financial crimes could be use the value-added tax regime as a source of missing trading value-added tax fraud. For example, and how does it work of value-added tax? Number one, purchase the components. For example, 600 euro plus in Europe or in UK it's 21%, but suppose the value-added tax is 20% of amount of 120 euro of this value-added tax purchase. Then we will start to manufacture all of those purchases like shipping, plastic and fiber, screen, keyboards, and produce another product, complete product called laptop. Then sell the finished item by 600 plus 20%. We got 80. Sorry, 200. So the difference between 200 and 108 and 120 is 80. They were not able to pay for that. So the sales tax is 200, and the tax on purchase, tax on sales, 200, and tax on purchase, 120. This 80 is the right for value-added tax authority should be paid to the government. At the carousel fraud or value-added tax, the fraud setter moved to import or to export since they like to keep their transport costs down. How can they make it? By sale high value of product with a less volume of products, of components. They specialize in high value with less or low volume goods. Initially computer chips, but then moving into mobile phones. It's low in quantities, but in high terms of military units. So that will remind us with the scenario for value-added tax and the anti-money laundering scenario. The money laundering scenarios start to use the high volume of product like precious metals, 99%, and use all of those products with less volume to create lots of manipulating scenario for having lots of cash through all of those scenarios. Suppliers of goods between members of the GCC are zero related for value-added tax purposes. So a VAT trader effectively receive goods for free. The fraud setter established the fraudulent trading chain, analysis of the companies, and the chain would go missing with the value-added tax. So the value-added tax fraud of carousel, it's started with the European supplier sales UK trader 1 million phones. 1 million sterling pound phones with zero VAT rate. Then they start to trade a sales to the UK. Trader B with 1.1 million plus 2,200,000 value-added tax. Reclaimed zero VAT, owned 220. The net payment due to 220 payment. Then the sales, the UK trader A goes missing with the 200,000, and then sell the UK trader C for 1.2 million plus the VAT. Reclaim they take the money for 220,000, owes 240, net payment due to 20. Then they start. Number 4, UK trader C export to the UK trader outside the UN, outside the UK, and the UN trader 1.3 million plus VAT. They did not claim for the claims for the 240,000, owed zero value added tax. The net reclaim is 240,000. Goods are re-entered again, re-enter the cycle again to the same products, and the UK trader A goes missing with the 220 value added tax not paid for the UK government so far. So they create a huge amount of money if they make a lots of rounds, and the value add causal fraud turnover, if it's rounded for more than 20 or 30 times a year, it will create a huge amount of money. It started with a very small amount of by 220,000, and this amount of money has been skipped from over make a tax evasion. This tax evasion could create a huge amount of money passing the first stage of anti-money laundering, so it will be easy to create or open a new business inside this country. The saving amount from paying to the value-added tax authority could create a huge profit or personal profit, illegal profit for the person who manipulate these issues. So this is carousel fraud. Value-added tax will create a lots of people who encourage themselves to sell the value volume products through using the zero rate supplier rate within one region, one country, and the escape, make a evasion from return all of those sales on or value added or tax on sales with zero rate to the government, and they kept it aside. So this saving of money from paying for the value added tax authority will create a huge amount of money to make all of those manipulation. So the tax authority and counter measurement, what the tax authority has been done recently in GCC country like Oman and Dubai, Abu Dhabi, they create to enhance the contactless economy or contactless technology using the touchable cash, not or it's not considered as a cash payment, but a tax cashless payment. Not digital payment, but the tax using the barcode for touching the screen and paying without any contact. And this could provide a tracking down system for those people who pay for all of those issues. So we can take the national insurance number of tax or tax number, and they kept aside in order to track all of those suppliers who manipulate paying for all of those tax. So when the tax authority proved in the countermeasure in the form of reverse charge, order on electronic and mobile phone payment, the fraudster moved on to carbon credit and to wholesale telecommunication industry. So they tried to escape from all of those monitored money through the contactless technology, using RFID technology and using the touchable screen or paying for all of those fraud payment or manipulation. Tax authority were not imposed by the value-added tax fraud and responded by refusing input tax to pepper trader further down the chain. So those people, the further down level of this value-added tax payment chain, will be charged for all of those payments. So in this, whereas it could become a trader problem if you are in the chain, because the trader then take the losses. The people who are in the lower chain will take these losses rather than the authority. So the Federal Tax Authority will try to avoid this manipulation through the technological way, through the taking their responsibility in data collection. But there is another rule in your side as an auditor. So this ruling can be broken down into the three components. Was there fraudulent evasion of the value-added tax? Yes, this is a fraudulent evasion of the value-added tax. They will not pay for the tax on sales. to the value-added tax. Was the transaction connected with that fraudulent evasion of the VAT? Yes, they connected with. So we actually know exactly with the infrastructure of value-added tax authority who should pay and who will delay and who will evade from being paid for the value-added tax. Did the taxable person know when he entered to the transaction, or should he know? Should have known? It was conducted with the fraudulent evasion of value-added tax. In order to wash your hand from all of those connection of value-added tax frauds and evasion of tax with very huge amount of rate of financial crimes, we have to know, or we have to let our customer aware of all of those problems. If he connected with the fraud evasion of value-added tax, because if he or she found him or herself connected with this type of fraud, the law is very clear, because they have to charge or consider as a tax evasion criminal. So in order to avoid all of those issues, so what the auditor should inform you to determine if you should have known. So the auditor expects traders to take every precaution which could reasonably be required of them to ensure that their transactions are not connected with the fraud. So we have to make sure that you inform the client, as long as they have intra-community value-added tax transaction. So make sure that they paid for all of those sales inside and outside the value-added tax, to avoid connecting with the tax evasion, especially the value-added tax fraud evasion. In the absence of the clear guidance, it's necessary to apply a risk-based approach, RBA, that we have already explained last week, which is you should have this risk-based approach, as you would with any other risk involvement. So identified of high-risk area, risk assessment, or reinvent the risk for value-added tax. What type of risk, and to what extent this type of risk will be connected for another type of risk, which is related to the anti-money laundering, terrorist finance, because maybe this type of transaction could put or bring lots of problems and troubles to the customer regarding to the parties or source of funds, or the type of international transaction worldwide. Maybe with the high-risk countries has been involved, or all of those zero-rate suppliers are related to the high volume of product, which is maybe considered as high-risk products. So opening, monitoring of account, and training and awareness, the governance is very important as well. But from your side, you have to identify the high-risk areas. Make the framework, another framework for risk assessment. The risk assessment for a new and existing counterparties is very important to be highlighted. This is for the first part for this lecture. Hopefully it could shed some light on some problem regarding to the tax evasion and any fraud could create the tax fraud center. And also we can consider the international tax regime once we deal with different parts and different types of tax. We could shed some light on another tax fraud, and this is your responsibility at the end of the day to make an external advice to your customer and make them aware of all of those tax evasion using international value-added tax regime to not to pay for the Value Added Tax Authority sales or tax on sales payment. We will continue with another topic if you do not have any question in the second half of this. Salim and Mr. Salim, please, if you have any question, please, you have raised your hand up. Mr. Salim Al Jeffley, please, can you please issue your question now? Okay, so I will meet you after 25 minutes from now after the last break. Thank you so much indeed, and see you later.
Thank you, doctor.
How are you, everyone? Welcome back again to the second half. For this lecture, we'll talk about another topic related to the bankruptcy issue, which has been recently happened in the Gulf area, especially in the UAE, in the post-COVID-19 subsequent event. Consequently, based on the post-COVID-19 circumstances. The bankruptcy concept is the definition of stop paying for the short-term liabilities. And the opposite definition for the bankruptcy is the liquidity. So cash flow and liquidity is the most important ongoing concern assumption we need to highlight it before we start our auditing journey. And we have to make sure that the bankruptcy analysis has been made for existed and the expected customer or well-known customer, or those type of customer who are very new to the market, or we did not have any information about those customers for the first time we start our due diligence or going concern issue. So stopping for not paying for the short-term liabilities and long-term liabilities is considered as a bankruptcy case. This bankruptcy case has three main types. The friendly bankruptcy, so we ask for a protection from the court as a new behavior from stopping payment and ask for rescheduling to take a breath, and then we can reschedule our loans and payment. Then we can start up again, and this is the main reason behind the UAE loan and law. So in case we found any difficulties in paying for the short-term loans and short-term liabilities in general, like for example the paying for salaries, paying for wages, and purchasing inventory for future business plan, we can ask for protection from the court in order to take a breath and reschedule our own bankruptcy profile and solvency profile. It starts with the financial difficulties and then solvency risk, and once it's continued to be more worth, it will be a bankruptcy file should be applied to the court. And the other type of bankruptcy, which is the mismanaging the bankruptcy loans and mismanaging the or mismanagement of spending issues and short-term liabilities and paying for the or making the cash flow in a good position in post-COVID-19, and that normally happen in post and during the financial crisis has been made. Historically, in the last 30 years, we found that the bankruptcy happened in different cases as a friendly application to the court. So it's a friendly application asking for protection from the court. Number two is mismanagement, and that's actually appeared in the or during the financial crisis because of the history of mismanagement of spending and cash flow. And the third type, which is the fraud bankruptcy application in order to escape from the country or ask for any other scenario and use the beneficial issues, which is the 30 days, which the court asked the company or the bankrupted company to provide a business plan for within 30 days. And some solicitor start to use this case or this bankruptcy case in order to achieve a personal abnormal defense strategy through escaping from the country or asking for another way not to pay for the short-term liabilities. So those three types could be presented in the bankruptcy issue. And the law said that the bankruptcy is the case where the debtors not able to or stop paying for the short-term liabilities, and this is considered as a bankruptcy issues. And the UAE laws try to define the creditors, debtors, solvency, bankruptcy, winding up, and liquidation as a strategic surgery for the bankrupt companies. So if there is no need for any rescheduling or any issues regarding to the bankruptcy case, there is no possibility to rearrange the debts and rearrange the balance sheet and the financial statement. At that time, we will ask for winding up and liquidation by the court, and they apply for experts for liquidation in order to give the creditors all the outstanding debts, and then by selling all of, or liquidizing all the assets and liabilities, including the tangible assets and non-tangible assets, to pay for all of those outstanding debts. The bankruptcy law is a major step forward and is influenced by feature of number of insolvency law regime and the other jurisdiction, as well as the international solvency law trends. The UAE bankruptcy law is viewed as an improvement. Yes, that's totally right. If we have lots of cases of bankrupted companies case, that will give a bad reputation and not a very good image about the country where there are lots of bankruptcy, and that will raise up the discount rate for the future direct foreign investment because of the bankruptcy issues. So it's a good thing to solve the bankruptcy case by find a real life again for the company, a bankrupt company, and they start to solve the financial issues or financial spending management issues. That will allow the companies in the financial difficulties the opportunities to reorganize their affair or internal affair or management and assets affair to remain viable. The absence of ability to remain viable allow for all an orderly liquidation or liquidity process, provide relief from the most onerous effect of criminal penalties that had previously been in force. So this is not a good direction to make an enforcement for penalties or criminal penalties unless they have a fake business plan or they didn't have any issues regarding to the serious rescheduling issues for future outstanding loans. So in this case, we have to look at the bankruptcy as a friendly protection request from the bankrupted companies in order to solve the problem which has been made or has been caused by the current financial crimes. If we found as a court, if we found that the bankrupted companies has a bad history of mismanaging the financial spending issues and the internal affairs, so the financial crisis is not the main reason by being in this bankruptcy issues or bankruptcy application. Or we found that some bankrupted companies they need to take advantage of the circumstances happened recently in post-COVID-19 and mismanagement in order to have a time to not to take a breath, but to escape or to avoid paying for all of these issues. So the fraudulent bankruptcy application will lead dramatically to liquidation issue. The key limitation for the bankruptcy law is that the secure creditors are not bound by the proceeding commencing under it, such that the security remain capable of being enforced with the permission of the court. The bankruptcy law appeals certain previous insolvency-related criminal offense and expand the protective composition and the bankruptcy procedure into two key court-driven procedures. The bankruptcy law provides for financial restructuring committee, and this committee has been held by the court in order to oversee the management of restriction procedures, in order to facilitate the restructuring agreement between the debtors and creditors. Early draft of the bankruptcy law provided a private out-of-court procedures for companies in financial difficulties but not yet insolvent, which is in line with the internal trends insolvency law, because the solvency is the prior stage before the bankruptcy protection application. The auditors have the highlight material uncertainty and going concern related to the assumption of going concern or expressed qualification on the list of issuers' ability to continue as a going concern. So I have to make sure that the liquidity issues in a good position to carry on the business as a going concern. And the cash flow and the future risk for credit risk will not put the company in the shorter term within 1 year in a bankruptcy problems or risk. So we have to make this type of consolidated report regarding to the financial analysis for profitability, liquidity, and efficiency, and their relationship with the expected risk of lockdown, to what extent this lockdown risk will affect the expected returns and may affect as well subsequently to the bankruptcy problem. 50% or less of the issued and paid up capital, including treasury shares of the listed issuers. Preventive composition, this is one of the value added of the framework provided by the bankruptcy law to protective compositions on the arrangement made by the debtors and creditors, which are modeled loosely on French safeguard procedures. The financial difficulties but not yet insolvent or has been insolvent for a period of less than 30 business days or working days, that will give the opportunity for the bankrupted company or solvency risk cases to provide a business plan, a real business plan within 30 days, 30 working days, in order to solve the problem or to show that we have to rearrange or restructure again our internal financial spending management in order to face all of those financial challenges. And that will bring the company back again to the financial and business track and will solve all of those problems in the present time. So the procedures aim to facilitate or to analyze the rescue of the business by helping debtors reach settlement with its creditors. Also, the preventive composition is an application for having the possibility to rearrange or find a safeguard space between debtors and creditors by the court, and the court will protect the solvency case and provide all the consultancy and concealing services to overcome all of those problems. The composition application must include detailed information on the debtors, including an overview of financial situation, liquidized assets, the case for termination and employees who did not take their rights so far, and creditors, debtors, copies of financial books and statements, proposal for the prevention issues. Other useful tools under the composition procedures, including prevention of insolvency, related contractual termination by the debtors, counterparties, suppliers, employees, and also the ability to raise priority funding for secured or unsecured basis in order to allow business to continue in the future position. And this is the main aim behind the having the concept of composition or preventive composition. The provision for appointment of the creditors-led supervisory committee to mention the implementation of the composition plan, although the fact of no fees may be paid. So it's a voluntary work from the court side in order to prevent any unpleasant restriction order against the solvency case. The bankruptcy under the law was the formal split into the two perils or limbs, which is the formal restriction and insolvent liquidation. The bankruptcy is an application for declarate and can be made by the debtors, public procedures of court. And in Dubai, if the case is not exceeded 1,000 dirham, there is no need for providing the 30 business days, so they can pay the issues of 10,000 dirham as a solving issues, and that will will not or will help the case avoid any criminal case or restriction against the debtors. That's happening in Dubai only, but in Abu Dhabi there is another federal law. The amount, if the overdue amount is less than 10,000 or 100,000, is not a case for a criminal jurisdiction case. It's just only for civil court issues. Liquidation, the court can order insolvency, winding up of business if a preventive position is no longer restrictive scheme with the bankruptcy is inappropriate issues, not approved, not showing a serious business plan for future requisition and prevention issues. So the liquidation is the only medical surgery for this patient bankruptcy company. A debtor is acting in a bad faith or to evade a financial obligation, unlike composition or restriction, where they focus on securing the debtor's business. The liquidator is required for liquidate audits, so the liquidator could be hired by the court for auditing companies who are auditing auditors who are having a lots of background in this issues. Yes, please. Yes. Any question, please? Okay. Maybe the directors will be a part of this liquidation for personal account if the company failed to pay 15 or 20%, sorry, 20% of the total assets will not cover the total creditors, outstanding order and money. So they will go back again to the financial personal assets for the directors, and significantly through the failure to file for bankruptcy within 30 days, working days times period, no longer incur criminal liability on the report of directors. So other changes is about the claiming for waterfall, which is a claim obtained priorities in a preventive composition, bankruptcy, and liquidation, and also identify the class of creditors. In summary, it's a good composition and position of bankruptcy filing, and at least temporary relief from creditors, take a breath, and also helping other creditors to solve all of those other problems and stay of criminal action until process is completed. Opportunities for wipe away debts and potentially avoid personal liability, because at the end of the day, this type of bankruptcy issue will affect the whole company and the whole country with a bad reputation regarding to all the business has been bankrupted during a particular financial crimes. The possibility to rehabilitate companies as circumstance warrant. The role of auditors here, number one, before accepting all of those outstanding or expected to have a bankruptcy case, we have to have a customer due diligence regarding to the going concern assumption as a most and important issues regarding to the cash flow and future liquidity position and future bankruptcy in case of the future lockdown. So we have to have online and offline analysis collecting all of those data regarding to the future bankruptcy in the this type of industry. There is some sensitive or vulnerable customer vulnerability is very high related to some industry like real estate properties. If you could remember in 2008, the majority of industry, which is was very vulnerable to the change and the radical change during and after the crash, credit crash problems happened in or started in 2008 till 2012 in Europe and all over the world. We found that the bankruptcy has been affected, particularly industry like banking in the first place, the real estate properties, and the price of properties going down sharply, and the mortgage as well has been affected as a banking product, financial product. So there is some most of the financial crisis, there is some vulnerability happened to some type of customer and family business, and also the some industries. So we have to make sure regarding to all of those issues, which I found a relationship between those vulnerability industry and products and customer and family business and the anti-money laundering fraudulent crime. We found a relationship between the anti-money laundering type of business, which is witness lots of bankruptcy issues, and anti-money laundering are the same. The vulnerability industry during the last three issues, last three industries, they are all about real estate, banking, and intermediaries services. So we have to make sure that once we have a client related or the source of fund related to all of those type of vulnerability industry, we have to make sure that we have a good going concern analysis for the future liquidity and bankruptcy level once they have any lockdown in the future time. especially once it comes to the pandemic, post COVID-19 crisis, where there is lots of changes and uncertainty. In this case, are the only certainty for that. Lockdown could be happen most of the time. There is a turbulent environment. There is no information. There is no probabilities, and there is a restriction. Or at the end of the day, we can say there is a new norm. We have to facilitate. We have to carry on. We have to expect it. So the only thing is going concern. Uncertainty analysis and sensitive analysis to particular issues. Make sure that the cash flow in a good position, especially with real estate, where the payment for the expected returns will take longer than 1 year. So we need to make sure that during this year, for this contract, we have already making sure that there is nothing wrong could happen, unless you have future public sector, so you are responsible even more than 1 year for this case. But at the end of the day, during this year, you have to have a good expectation about the future of going concern and to what extent that current situation will affect the subsequent event and then the materiality provided by these companies. Also, we have to have updated information. In other words, we can say we have to be more agile related to the proactivity and predictivity of this type of industry regarding to the future cash flow and spending management. A study has been made in 2012 in Western Europe. The study collected all the information and subsequent event regarding to 655 bankrupted company in Europe, and they found that 10% only for external auditors provide a report regarding to the solvency problems. Only for the solvency problems, only 10% of the this company, the external auditors, provide this report. So, on the other hand, we have to make sure that everything regarding to the special report should be issued regarding to the expectation for bankruptcy before the bankruptcy by 35 days, 72 days, or more than that. So at the end of the day, we need to make sure that everything regarding to the going concern and the cash flow, materiality, and the financial statement is going to show that there is an expectation at least for 1 year, and there is no vital subsequent event may happen after issuing the report. In case of the bankruptcy, we have to provide at least one report for the management. Could be a written representation for the auditors to make sure that we have already dragged the customer attention regarding to the future or the current and the future solvency problem may happen in the current reviewed financial statement. And based on the forensic issues, we have to highlight some questions regarding to the future issue. If we collect some information about or some answer about this question, which is make our faith happy regarding to the going concern, we will write that to the report. If not, we have to file at least a report, formal report, with a formal meeting or conference meeting, record all the issues regarding to the bankruptcy and bankruptcy expectation or insolvency risk regarding to the cash flow and going concern, current going concern issues. This is the main responsibility for the auditors. There's a lot of examples regarding to the bankruptcy, especially with the real estate and issues regarding to the properties, but still in the court, we were not able to highlight any facts regarding to that unless we found the case of this bankruptcy companies coming from the court for publication, for training purposes, for enhancing our own knowledge regard to all of those case study or real life case study. Okay, so in this case, do you have any question regarding to those two topics? Okay. Thank you for your time. This is the end for those two topics about the bankruptcy issues and also about the value-added tax and the due diligence, customer due diligence issues, and the fraud for value-added tax. Any question, I'll be more than happy to answer it. If you have any question, please. Hello, any question?
Thank you very much, Doctor.
Thank you so much, my friend. Thank you. And if you don't have any question, I will see you, inshallah, tomorrow at the same time. Be positive and be happy for the current time. Take care and we'll see you later. Thank you.
Thank you, Doctor.